In Washington, as you see, let's now bring in the Wharton Professor of Finance, Jeremy Siegel, also Wisdom Tree's Chief Economist. Welcome back. It's good to see you as always.
Good to see you, Scott.
Are we back? We out of the woods?
Well, first, let me say that what we've seen over the last 2 months, I think, confirms two of the oldest sayings in Wall Street. And one is, of course, don't try to time the market. And two, there is a lot of value to diversifying your portfolio. The S&P is still down in the U.S. Year to date. Europe is up 15 to 20%. Emerging markets is up virtually the same. We're finally seeing that diversification pays. Trying to time the market is a fool's errand. That being said, there's no question that traders expect a big pullback from the tariff position that Trump now maintains, that a lot of these, many of these, most of these are going to be taken off, before that July 2nd deadline of resumption of the reciprocal tariffs.
You surprised at the magnitude of this rebound that we've seen? I said we're going for 9 days in a row when we haven't done this since 2004.
Right. I am surprised. I think one thing that people don't realize is there's a huge tailwind. I mean, we know about the headwinds of the tariffs. There's a huge tailwind of the 10, 12% decline in the dollar for the multinationals in terms of bringing profits back from Europe or elsewhere in the world. They're going to be enhanced. So some of the tariff problems are going to be offset by the fall, and not all of them. And let's be honest. American public has not yet felt the tariffs. They've heard about the tariffs. They're plastered on all the news. But for a lot of people, they say, oh, rising prices, I'll believe it, when I see it. And they haven't seen it yet. So, in many ways, there's a lot of talk about the bad effects of the tariff. But at this particular point, American public, even though it's, the polls are not great on that issue, they don't yet reflect the full impact that they will see if Trump stays on the current course.
You think this, U.S. exceptionalism trade, which got so talked about over the last month or so with the activity we saw not only in the bond market, but because you do mention the dollar, do you think that was greatly exaggerated, that too much was made of that this is still the place where capital from around the world is going to flow? We have the best, we have the deepest market in the world, we have the brightest and most transcendent companies in the world, and this is where those monies want to be.
Yeah, absolutely. Listen, despite what maybe Trump will say, I mean, Trump is only going to be president for 3.5 more years. The exceptionalism, the deepest capital markets are the place where innovation, where you can market, we have a pride in innovating, bringing things to market, destroying the social order, so to speak, disruptive technology. That's all in the United States. And that, surpasses any president that we're going to have. Remember, stocks are our longest term assets. And really 3.5 years, people say, oh, it's going to be bad for 3.5 years. When you take a look at, how long the earning stream of stocks go, 3.5 years is really a very small part of the present value there. So, whatever you think about whether Trump is going to do good or Trump is going to go bad, the exceptionalism of the U.S. economy surpasses that by far.
It's unbelievably resilient. I think more so than many have even wondered in their wildest imaginations, from COVID on the other side of that until now. And maybe the worst is yet to come with the tariffs. We don't know. But this economy has had a resiliency that I don't think many people expected. And as long as the labor market, Professor, hangs in like it appears to be doing, we don't have to talk about recession every conversation, do we?
No, we don't have to talk about recession every conversation that we have. However, it is still my prediction, unless he backs off on these and we get a lot of relief before that July, recession is still a possibility. I don't think we could rule it off. But I think the president is if you've noticed, he has softened the tone since the April sell-off. We don't get quite as many wild, up and down accusations one way or the other. I think part of it is his advisors. I think part of it is some discipline from the polls, to be honest. And I still think he listens to the polls, and people are very cautious. They're very skeptical. The mainstream media, of course, is just blaring, oh, rising prices, everyone's going to be poor. People are waiting to see, and he has to listen to what those people are saying.